I like silver as much as I like gold. In fact, at the price levels they're at today, I think silver's a better value. Gold is trading at an all-time high, and silver's it's not quite half of its two previous all-time highs. So I think from a financial perspective, silver is a better financial opportunity right now.
If you're finding value in what you're watching, consider hitting the subscribe button and turning on the bell notification. Oh, and don't forget to drop a comment. I love hearing your thoughts and ideas. By the way, we have got a ton of other videos waiting for you. And if you are ready to level up your mindset, come hang out with us in our private Facebook group called Mindset for Business Success. Welcome to Super Entrepreneurs Podcast. I'm your host, Shahid Durrani. Today we have with us Dana Samuelson. Dana is the founder and president of American Gold Exchange, AGE, a leading national precious metal and rare coin company specializing in dealer-to-dealer trading and direct-to-consumer sales. Welcome to our show, Dana.
Thank you. It's wonderful to be here.
Great to have you, my friend. First question is, how many kgs of gold do you have? Personally.
Well, a kilogram is 32.15 ounces, and I've got a few of them. I've been hoarding or building my position over the years. So
wonderful. What about silver?
Oh, I like silver as much as I like gold. In fact, at the price levels they're at today, I think silver's a better value. Gold is trading at an all-time high, and silver's it's not quite half of its two previous all-time highs. So I think from a financial perspective, silver is a better financial opportunity right now.
Back in 2009, I believe, my brother was looking to make a purchase, and I told him, buy silver. I just thought one day is going to be something, but it went up and down for him, and he was really stressed about the gold. He bought bullions, I think 2 or 3 of those bricks.
I think it's what people should look at in precious metals as a way to save money outside of the currencies, which are being depreciated by printing and debt and inflation. So I'd much rather have a savings account in gold or silver than in dollars or any other currency, because gold has gained about 8% a year on average against every currency around the globe for the last 20 years. Now, it's lumpy and your timing matters. So if you bought following, like your brother did, following the great financial crisis when metals got hot, you could have bought near a high and then had to wait a long time to get money back. So timing matters a lot. But right now we're in a bigger cycle, and I think the metals have more room to run because of some of the fundamentals that are in place around the globe today. For example, our debt just keeps going higher, and gold and silver are tracking our debt. We've got 2 wars going on, which is not good for the world, but precious metals tend to climb a wall of worry. And we're in an inflationary environment, and commodities, tangible assets, tend to do well during inflationary times.
For someone that's looking to invest in these precious metals, would you recommend they purchase and look to flip them, like an investment where they're ongoing, like you would do in the stock market? Or like you said before, you save it, just sit on it and forget about it?
Yeah, I think 5 to 10% of assets is a good allocation for precious metals as a component of a financial portfolio. There are times when you want to take profits. I'm in the physical precious metals markets.
Yeah.
And there tends to be a bit of friction on the transaction. And by friction, a spread on the buy price and the sell price. On gold, it's about 4% for physical gold. And on silver, it can be $1 to $2 an ounce. So these are not really trading vehicles in the traditional sense. You've got to have a bigger move of the underlying metal price if you want to take a profit. Now, one of my real estate friends has said it best. He said, I like to buy real estate and I like to buy precious metals to give myself a present 10 years from now. So you have to have a long-term perspective.
Good ways.
You really need to think about it more, I think, as a savings account rather than an investment. But it is a good hedge against financial crisis, inflation, and geopolitical trouble.
Carrying gold, using it to make purchases, it might be difficult in today's age. But do you ever think bringing back these precious metals into day-to-day trading to purchase things will ever become a reality with what's happening with the dollar?
It's possible. In that environment, things will be really rough because it means the currencies aren't functioning the way they should.
Mhm.
Now, we have had countries where their currencies have gone into hyperinflation. We've seen it many times around the globe over a historical period of time. So I'm not saying that's going to happen with the dollar. The dollar is the world's reserve currency. It's entrenched in the financial system around the world, but we're not running our finances well in the US, and most other countries are not either. It took us 200 years to get to $5 trillion in debt, and that was around 2000. And in the last less than 30 years, we've multiplied that debt sevenfold. So we're not being responsible with our finances. And a lot of people realize that, especially around the world. If you look at the US from outside of the country, a lot of foreign investors are going, "What are you doing over there?" And our politicians are not going to get this problem fixed until something breaks. The US government did a study that came out just in the last 2 weeks that said Medicare will go insolvent, and so will Social Security in the next 11 and 12 years. That's a big deal if that were to happen. If you don't run your financial house well, then the currency will not continue to maintain its value over time. People will start not to trust it, and they'll find other places to go. Now, I don't know if gold and silver will ever be practical as currencies again, like they were for 2,000 years of man's history. What gold, physical gold, is really transportable wealth and transferable wealth. 100 ounces is about 8 pounds. It's the size of a paperback novel. You can carry it around in your pocket pretty easily, and it's worth about $250,000 today. That's what gold is. It has no counterparty risk, which is really its attribute. Silver, on the other hand, might be a good currency in the event that there was a lack of trust in the financial system, because its price per ounce is a lot lower, and it's actually priced at a level where you can use it to transact things. A couple ounces of silver gets you a tank full of gas right now. If you want to look at it that way, in your car or groceries at the grocery store, where an ounce of gold at $2,400 an ounce, that's a big trade for 1 ounce. You've got to have much smaller coins if you want to do something in gold. Silver's really perhaps what you want to have in the event that the financial system breaks down, and that you want to go to something people might trust more than dollars or yen or euros.
What about the difference between buying physical gold and silver compared to investing in actual mining stock?
Yeah, I'm not a mining stock expert. I understand how it works very well. So when you own physical metals, you've actually taken possession of that metal. You control it, and no one can sanction it. No one can seize it. So that's really the attribute of physical metals. Mining stocks are the companies that mine the gold out of the ground and the silver out of the ground. Now, their profits are determined by what kind of a deposit they're getting out of the ground, how high grade it is, how accessible it is, and how well the company manages the business above the ground. So you've got a couple different components that are different. Now, mining stocks used to be the way to buy, you could buy gold and silver on paper for decades. And they offer you some leverage to the metal price, because if the cost per ounce to get gold out of the ground is $1,600 an ounce, and the gold price is $1,600, you break even. If the gold price goes to $2,000 an ounce, now you've got $400 profit on that ounce. If the gold price goes to $2,400 an ounce, where it is, that profit is now doubled, right? So that gives the mining stocks leverage, the mining companies leverage to the gold price, because they've just doubled their profits on that same in-ground ounce. But we're in an environment where energy costs are up, so the costs of farming the metal, getting it out of the ground, have risen too. So there's some variables there, but mining stocks have underperformed relative to what their past performance when the ETFs, which are exchange traded funds, came out in 2007, 2008, where you can buy gold and silver on paper as a pure investment. If you want to harness the price movement of gold or silver, the ETFs may be a better way, a more pure way to actually harness the price for price movement. But I don't recommend that as a way to own gold and silver for the long haul, just in case.
It's paper.
It's just paper.
Yeah.
And you got to hope that the ETFs that you're buying actually have the physical product to back it. I trade in the ETFs at times when I think the price movement is going to be strong one way or the other.
You mentioned hope, meaning there could be no backing of gold?
There's been some questions over the years whether some of the ETFs that actually buy and sell physical gold to back the ETF are actually buying and selling the physical gold that they're supposed to have. Right now, I think that they do that for the most part, but they may not be 100% all the time. And that's just natural with transactions, but I'm speculating on that. I don't want to be saying something that's not true. Remember, I'm a humble physical precious metals dealer. I've been doing it for 25 years, so I've been around a long time and I've seen a lot of things, but
I get it.
Yeah, I don't want to talk.
Of course. Regarding investors that may be thinking about buying physical gold, silver, do you have any recommendations or guidance regarding security, storage, selling of it?
Yes, of course. So when you think about buying gold, most people think about bars. I want to buy a bar of gold and I want to get it at the lowest price per ounce possible. Now, what I'm going to say is going to contradict that a little bit, but there's a very good reason for it. Since 1967, South Africa has been making 1 ounce gold Krugerrands. Since 1979, the Royal Canadian Mint's been making Canadian Maple Leafs. Since 1986, the U.S. Mint has been making 1 ounce gold Eagles. And since 1999, the Austrian Mint has been making 1 ounce gold Philharmonics. These are all sovereign minted, made by government, 1 ounce gold coins. And what they really are round bars. Their cost per ounce is slightly higher than a refinery made bar. But since the mid 2000 teens, about 2015, 2016, we've seen a growing but modest problem with Chinese counterfeits. They're knocking off bars and they're knocking off the sovereign minted coins, and they're becoming more prevalent in the markets around the world. Now, the thing is, sovereign mints have added design elements to their coins that make it much harder for the Chinese to replicate them well. While the bar manufacturers, the refineries that make the 1 ounce bars, don't have the same protections built into the design of the bars. So the Chinese can counterfeit them more readily and they pass more readily. They take tungsten and they plate it with gold. And it'll pass some of our testing devices. But the sovereign minted coins that have the much more intricate designs on them and holographic features on them in some instances, or slight design anomalies in them, they're much harder to replicate well. And while most of the public won't know the difference, professional dealers like myself can see these things a mile away. So it's very important.
Do you guarantee?
We guarantee everything that we sell to be authentic.
Okay.
Yes.
Okay,
good. We've never delivered anything that's not been real, right? So, and our senses are we buy directly from the mints ourselves, and we ship directly to the public in many instances. So we know the chain of custody. If something is suspect, all we do is we melt it and see if it's real or not, or we put a drill through it, which is what we have to do if we suspect something is not right. Now, this is not a big problem. But if you buy on online auction platforms or in private sales via some of the online trading platforms that there are, you might get something that's a little bit too good to be true and turn out that it really was too good to be true. So you got to be careful. And the way you sidestep that is just do business with long-standing dealers in the community that have good reputations, that have been doing this for a long time. That's really your best bet. And the market's very shoppable via the internet. There's some big companies out there and we compete with them for price. And we want to help people in this marketplace make sure that they're protected. And we guard our inventory, not just physically, but for these reasons. We defend what goes into our inventory. very sharply to make sure that we're getting the right product into our inventory that we're letting out.
Yeah, very important, and especially the scale that you guys are operating in. You definitely have to make sure that everything is running smoothly, I presume. Could you speak a little bit about big institution investors that are handling gold and silver investments? Is there anything that the individual investors can learn from them that you may be aware of?
We've seen a big change in the marketplace over the last 50 years as we've gone through several cycles. In the 70s, we had a really high gold price and a inflationary cycle. We went through a quiet period in the 80s, and now we're in another phase where we have inflation and geopolitical uncertainty. What's happened since the great financial crisis? For most of the last 50 years, central banks around the world have been net sellers of gold. They had gold as currency that got melted into bars following World War II, that they've held for years. And since the 50s, 60s, 70s, 80s, and into the 90s, central banks, for the most part, have been net sellers of these big piles of gold that they've had forever. Since the great financial crisis of 2008, starting in 2011, central banks have become net buyers of gold. Now, the annual production of mines is about 2,500 tons of gold per year. That's how much gold comes out of the ground. From 2011 to 2021, central banks have been, on average, buying about 500 tons of gold, which is 1/5 of what comes out of the mines. In the last 2 years, since since Russia invaded the Ukraine and we sanctioned Russia, seized their assets, and kicked them off of the SWIFT international banking system, central bank buying of gold has doubled to over 1,000 tons of gold a year, or 40% of mine production. And this is for two reasons. Number one, a lot of central bankers around the world said, hey, if the U.S. has seized Russian assets and sanctioned them, they might do the same thing against us if we own U.S. treasuries or have a pile of dollars. But if we own gold in a vault, they can't sanction that. So that's number one. And number two, since the debt explosion that followed COVID, central bankers who are printing the money that's creating all this debt have increased their gold buying dramatically. They've doubled it. And I think they know what they're doing to the financial system and the risks that they're creating in their own currencies, and especially what some of their trading partners may be doing with their currencies. So they're buying gold in a much bigger way as a hedge. And this is something we've never seen before in the modern era. And it's big, and it's helping to underpin this higher gold price.
Do you think it's going to continue on?
Yeah, I do. I don't see any change in what's happening, especially as we've gone to an East versus West political dynamic in the world. Russia's invaded the Ukraine, and China is backing Russia. And we're not getting along with China like we've used to. And we're seeing a de-dollarization movement where a lot of countries that have been relying on the dollar for years are trying to find ways out of the dollar. Now, the dollar is entrenched in the world's financial system, but more and more we're seeing countries, especially on the eastern side of the world, trading with each other in their own currencies as much as possible. And they're shunning the dollar. The dollar used to be about 70% of the world's transactions, and now it's a little less than 50% of the world's transactions. And that's a trend that's going to continue. So I think that there's a movement afoot to shun the U.S. dollar, and it's growing. At some point in time, the U.S. dollar may no longer be the world's reserve currency. I think that's a ways off from now, but the trend is in place to make that happen. And so that changes the world's dynamic quite a lot, because the dollar's been the world's reserve currency since 1945.
So good idea is to buy physical gold and physical silver to be safe.
A little gold and silver can go a long way if you really need some financial protection from a currency that's losing purchasing power due to inflation and mishandling of the finances. It's ironic that if you look at the Eurozone right now, Germany has been the economic engine of Europe for years. And right now, Germany's on the edge of recession. But the countries that are doing the best in the Eurozone right now are Spain and Portugal and Italy. And these are the countries that were part of the great European debt problem 10 years ago because they were spending too much money relative to what they took in taxes. And over the last 10 years, they've gotten their finances in order. And now their economies are actually performing better than Germany, which is not doing as well because Germany has been reliant on Russian energy for years, and now they're paying the price for that. So we're seeing a different dynamic when countries run their finances well is the point. And if countries around the world could go to more austerity, we might see a change in this big trend that I see happening, but I don't see it coming anytime soon, to be honest with you. And I don't mean to be a doom and gloomer, Shahed.
Yeah. No, you're basing it on research and the business you're in. It requires you to be on top of it.
These are facts. These are facts.
Yeah, these are facts. Yeah. Doom and gloom. No. So for when it comes to resources or consulting services, for example, that may be out there, could you suggest some areas or point to some areas where anyone in the audience that wants to learn more about this that can start gaining the knowledge necessary to get their hands dirty in gold and silver?
There's a lot of resources on the internet. My company is American Gold Exchange. We're located out of Austin, Texas. Our website is amergold.com, and we have live, transparent, competitive pricing on all the products I mentioned a little while ago, both refinery-made bars and sovereign-minted coins. We also have a wealth of information on our website. If people are interested in learning more about physical products, we have a getting started guide that we can email people in a PDF form that explains all of the basics about the most widely traded, competitively priced, sovereign minted products that I've discussed. And we deal in these, it's a very competitive market. We deal in these because it's best for our customers. Because at some point in time, you're going to want to sell and you want to have ease of sellability, which is why I trade most of my business in these products that are recognized around the world. Any reputable dealer will know what they are. They're immediately liquid. Gold is one of the most immediately liquid things that you can sell to raise cash if you want to raise cash, if you need to raise cash. That's why I deal in the products that we deal in, and they're all very fully explained in this guide that we have. So if people want to email us for that guide, they can simply send an email to info, I-N-F-O, @amergold.com. Just put in the subject line, Getting Started Guide, and we'll email you that. We're consultative. Yeah, we're consultative in the different products. There's some very slight product pricing differences because the different mints charge a little bit different for the same ounce of gold. Some are more popular than others, not by much. Basically, what I'm talking about, if it was ice cream, I'm talking about vanilla, chocolate, and strawberry, the most popular.
Yeah, it's like branding value that's attached to it as well.
Yeah, exactly. Exactly. Yeah. We can help people that way.
Okay, that's wonderful, Dana. Can you share any common misconceptions regarding investing in solid gold, physical gold or physical silver that you can share?
Misconceptions. I think more what I can explain is it's not so much misconceptions. It's just that we're an unregulated business. And there are opportunists that come into our marketplace, especially in a good market like we're in now, that are in it just to make as much money as fast as possible. And these companies can bait and switch, lure you in with a loss leader, and then try and sell you something they're going to make a lot of money on that you're going to have a hard time earning profits with. So it's very important that you deal with reputable, long-standing companies in our marketplace for that reason. I'm actually an expert witness for the government, the CFTC and the SEC, in a case where a precious metals dealer allegedly sold product at too high prices. And that case has just come to settlement where the owners of the company have agreed to disgorge $50 million of ill-gotten gains that they received by charging high prices to their clients who just wanted simple gold and silver for gold and silver's sake. I'm doing this because it's the right thing to do. And we've been
Wonderful.
successful in this case. So
Great.
who you do business with is extremely important in our
Extremely
marketplace.
important. I
Right.
agree. I agree, Dana. It was great talking to you today, my friend. You shared a lot of important information, especially for people that are watching the dollar or looking at the economy and they're looking to invest. We love bringing on investment opportunities or ideas or concepts for people to increase their income and also grow their wealth. So I'm grateful to have you on the show and help you spread this message because people are out there looking for help.
Yeah, thank you so much for having me. That's my job, is to help people get a good start in this marketplace and help them through the period that they want to trade, buy and sell physical precious metals. So thank you so much for having me. I really appreciate it. And I really enjoyed the podcast.
Thank you so much. Welcome to the family, and we'll be in touch.
Thank you.